All right, and it looks like we are at the top of the hour, so welcome in everyone. So today we are going to be talking about achieving total project control with integrated accounting. So the goal of today's session is simple but critical. We want to explore how integrating your accounting and project management systems can dramatically improve your financial visibility, streamline operations, and give you total control of your projects from the field to the financials. So as we go through the conversation today, please feel free to use the Q&A at the bottom of your screen to ask any questions that come up, and we'll answer them live during the webinar. We will also make sure to share the recording with you after the webinar. And if you're watching this on demand, we hope that this can be a resource for you and your team, and invite you to like and share this with your network. So with that, we'll get started.
All right, fantastic. Thanks, Katie. And again, welcome everybody. I was really glad to see we've got a good mix between operations folks and accounting folks. We are talking about integration, and sometimes those departments compete with each other. So I'm looking forward to the conversation we're going to have. Just by way of introduction, I'm Michael Wright. I am the Chief Strategy Officer of RedTeam. I was also the original founder, but probably more important for our audience is the fact that I'm a commercial general contractor. And so I've been in the commercial construction business for nearly 30 years. I've got getting close to about $2 billion of work in place. So my commercial construction business is a mid-sized contractor. We are not on the ENR 400, but we're pretty close. And of course, so that I think is probably the most relevant thing you can know about me. Other than I'll add, prior to getting into commercial construction, I did work in accounting and finance, including KPMG. So from the very beginning of my career in construction, I had a very specific focus and appreciation for the accounting. So I'm somewhat of a hybrid. And so I do love the construction accounting, and I do love the construction. And so I'm looking forward to today's conversation, and I'm very happy to be joined by Annette Bain. Annette is somebody I've known for many, many years in the construction business. And so with that, I'll let Annette introduce herself.
Thank you, Michael. It's a pleasure to be here and a pleasure to join you on this discussion. I'm a construction accounting software consultant, specifically working with project accounting software for commercial general contractors. I have followed the evolution of construction software from Lotus 123, if anybody remembers that, to spreadsheets, to DOS, to Windows, now to the cloud. I was a controller for a commercial general contractor for 9 years, and also worked for Intuit as a master trainer when they had the Intuit Master Builder product, which was kind of a groundbreaking integrated project management accounting software package, which has since evolved to Sage 100. After that, I became a #1 solution provider and am currently an advanced certified QuickBooks Online Pro Advisor. When RedTeam released their integration between RedTeam and QuickBooks Online in 2017, I was thrilled. Did a lot of testing, a lot of, I have some great stories to tell about those early days. But since that time, I've supported over 40 general contractors implementing that integration between RedTeam and QuickBooks Online, implementing processes. So I have firsthand experience about what the integration can do as far as delivering key, live, real-time information to management teams and how it can directly impact the profitability of companies. So thank you, Mike.
I'm going to add something to your stated resume. Fun fact, Annette was actually a contractor prior to getting into the construction accounting. And so one of the things that makes Annette so valuable as a consultant is that she's done both. She knows the ops side very well, and she knows the accounting side very well. I'll add one more thing. You also spend a fair amount of time working with the Sage products. And so that gives her a good understanding of what the construction accounting options are across the industry. So with that, I think we'll get into it. So current state of construction accounting and project management. I know that's a very big title, and we'll do our best to kind of focus on some of the things that are really most relevant to our audience today. There are obviously a fair amount of financial risks for construction contractors. Sometimes those are external risks, and I think lately, there's a lot of angst about just economic conditions, and we'll actually touch on some of those things as we go through the details. So this is a top 5. This is my list of top 5. It's not so dramatic because we're revealing all 5 all at once, but I'm going to go ahead and start at the bottom of the list, and we'll talk about each one of these. So number 5, consistent project management practices. Now you may be wondering, how's that relevant to construction accounting and integration between operations and finance? And I'll tell you, it's actually critical. One of the areas, so for me as a contractor, one of the areas where I've gotten pushback from my clients is when I change personnel on a project team. So if I change a project manager or assign somebody new to a project, it's not uncommon for an owner to push back and say, listen, I'm really frustrated. I had conversations with Jane, or I had an agreement with Bill about doing X, Y, or Z. These are very common issues that come up when personnel changes occur. And your best response to something like that is say, listen, we have a very comprehensive project management system, and all our project managers do things the same way. And I appreciate the fact that you had conversations with the former project team members, but anything and everything that you shared with them is in our system. I can assure you of that. And so the more consistent you are about managing your project and ensuring that your workflows are the same across the entire enterprise, it gives you a great way to respond to any concern from a project owner about maybe conversations that they had with prior personnel. So I can't emphasize enough how important this is to really building and scaling your construction organization. So that was number 5. So number 4, accurate financial reporting. Of course, that's near and dear to everyone's heart on this webinar. But it's easy to say, and it's actually quite challenging to do. And one of the key benefits of having integrated systems is it saves you a lot of time in producing financial statements. As everyone on this call knows, financial statements for a commercial construction company are critically dependent on things like latest revised estimated cost at complete on your projects, understanding exactly what the contract status is with your clients, understanding the value of all of your commitments on the project. And this is not just what's been signed and executed, but this includes construction change directives along the way. And so at any point in time on really every project, every commercial construction project, you've got open CCDs with clients, and you're in the process of either performing the work or proposing adjustments to the contract price and time as a result of those changes on the project. And so being able to manage all that information seamlessly between operations and accounting is critical to having accurate financial reporting. In today's operating environment, that's more important than ever, because your key financial partners in the industry rely on these financial statements. Who are your key financial partners? Well, number 1, it's your bank. Number 2, it's your surety, and I'd almost split that in two. I'd say your surety and your surety agent. They're almost 2 different entities, and you've got to manage your relationship with both of those. And then third, you've got your insurance company. And so at some point in time, you're sharing financial information with these key financial partners. And the more volatility we see out in the market, the more external threats there are to you and your business and your projects, the more important it is to make sure that your key financial partners have accurate financial statements from your team. Number 3, contractual and statutory compliance. We all focus as general contractors, we all focus on contracts, clearly contracts between us and our clients, upstream in the supply chain. But also we have to manage the contracts we have with all of our subcontractors and suppliers. It's critical. Going back to number 5, making sure we do this the same on every project is really important. With regard to number 3, compliance with contract keeps you in a good position to manage and control risk. You never want to be in a situation where there's a problem somewhere in your supply chain where your team is actually out of compliance with your own contracts, because it reduces your optionality in solving disputes and issues as they arise. The second half of this bullet, number 3, is statutory compliance. As general contractors, we don't often think too much about statutory compliance, but in an environment where there's a lot of volatility with our clients, you want to make sure that not only are you compliant with your contract, but you've done everything you need to do to protect yourself from a statutory standpoint. And what I'm speaking of is the mechanics lien law. And an example of this would be for those of you on the call like me who utilize AIA contracts. I actually like AIA contracts, but AIA contracts do not have an attorney's fee provision. And so even if you sign that contract without an attorney's fee provision, by paying close attention to your statutory rights, you could file a lien claim, which would give you, in most states, I understand, all except Texas, I think, but don't hold me to that because I'm not reading the statute. But the filing a lien claim actually gives you entitlement to recover attorney's fees in the event that you end up having a dispute upstream in your relationship. So that was number 3. So number 2, supply chain volatility. This is the thing that all of us, I think, are suffering through on the news each night these days. And so this volatility is something that affects upstream and downstream. So these things are impacting owners, it's impacting our subcontractors, and we need to be as construction professionals, either on the operations side and the accounting side, we need to be super focused on what externalities are impacting the supply chain both up and down. One of the things that I specifically I'm very aware of in times like this is the money that my clients have set aside to pay for work. And going back to AIA contracts, there are provisions in prime contracts that give us the ability to verify and validate that funds are available to pay for the work. And that's something we need to be doing. And that's a responsibility that really spans the enterprise. And so we need to be focused on making sure that our clients have funds available to pay for the work. And that if at any point there are constraints or issues associated with those funds, we need to be very diligent about making sure that we're fully compliant contractually and statutorily, so that we have remedies that can protect the business in the event that there is some kind of interruption of cash flow for our clients, something we need to be very aware of. And number 1, and this one is timeless, we need to control cash flow. And whose job is that? That's actually everyone's job. Everyone in the company is responsible for managing cash flow. And a lot of this gets handled automatically by being sure that we're compliant with our contract, being compliant with all our notices on the statutory side, but really understanding what cash flow is critical for the organization. For people that work for traditional businesses, non-construction service businesses, That means managing working capital. Working capital management for construction companies is a little bit different. For a traditional service business, working capital is for accountants in the audience. It's accounts payable minus accounts receivable. So why is accounts payable a positive number in terms of measuring working capital? Well, it's positive because the dollars in accounts payable belong to somebody else, but they're still in your bank account, which makes that a source of working capital for your business. On the other hand, dollars in accounts receivable is your money that is in someone else's bank account. And so the way we typically measure working capital for a service business is we take accounts payable and we subtract accounts receivable, and that number could be positive or negative. If it's positive, then you're in a net cash surplus position. If it's negative, you're in a cash deficit position. Now, I said commercial construction is a little bit different. What makes commercial construction different is that we have, at any point in time, we have something called over and under billings. And over and under billings is calculated on our WIP schedules, and it's dependent upon our revenue recognition. And so in order to understand our true cash position for a commercial construction project, we have to adjust accounts receivable for over under billing. And we call that net working capital. And that's a number that in RedTeam, that number gets displayed on every financial overview report. Why? Because it's everyone's job to make sure that our projects are cash positive. And Annette, you know that from your conversations with me over the years, that's a number that I've always fixated on in running the construction business day in and day out. And in our training, we always emphasize to our clients how critical that is. You need to understand where the money is. And that's essentially the net working capital tied up in each of your projects in progress. And I know that was very long-winded. I apologize for that, but these are 5 critical things that I really think everyone needs to know to be successful in this business. So Annette, pitfalls of disconnected tech stack. I know you've got some thoughts on this.
Oh my goodness, I do. Thank you very much, Mike. And that was an excellent description of net working capital and cash flow. And I think cash flow, without a connected system where you have project management, buyout, change orders, actual cost, at risk, which is key, anything that comes up with as estimate cost at complete, EAC, is absolutely critical. Accounting cannot do this in a vacuum. Project management cannot do this without accounting. So it is absolutely essential to address the risks that you just described with an integrated system. So some of the common pitfalls that I run down, I think one of the biggest problems that I see, the biggest pitfall and blind spot that I see is in accounts payable and in practical speaking in the world. If there's a disconnect between project management commitments and accounts payable accounting, it's very easy to pay vendors in the dark. This would lead to overpayments, duplicate payments, paying for change work without authorization. Some of the other things that can introduce additional risk to the project are paying vendors without proper credentials, insurance credentials, including your second and third tier vendors on the project. And this can be solved with daily field reports that document all workers on the job every day. We rely on the notice to owners to identify second and third tier vendors, but sometimes they don't file. And sometimes somebody might sneak somebody on the job. So it's really important to keep those daily field reports up and to make sure that every vendor on that job is insured and is compliant in all the ways that you mentioned. One of the other blind spots and pitfalls of not being integrated is not recognizing your indirect cost of construction. That would be your administrative and your overhead costs. So if you look at your profit and loss statement and you identify costs that are indirect costs of construction, what do I mean there? I mean costs that you would not incur if you did not have a construction project. Those should be recognized as part of your job cost. And different softwares do this differently. And if you were not integrated, this would not be possible. So we can get into more details about that later, but when we talk about criteria for software, another big blind spot I see is companies that manage their business, their accounting on a cash basis. Okay, cash basis, you can file your tax on cash if you want to, but your business, your construction projects should always be managed on an accrual basis. Without accrual, you don't see your balance on your open commitments. Okay, you don't see your estimate at complete. So cash basis accounting is only used for tax basis if that applies to you, but never for managing your construction company. We need to know, speaking to cash flow, we need to know what our estimate at complete is at all times and on a line item by line item basis. And then finally,
And that's actually,
go ahead, Mike.
that's actually a great point. And you know, I've said over the years, and in fact, with my business partners, when we review financial information for our business, we may spend 2 or 3 minutes looking at income statement and balance sheet. Where we spend our time is work in progress. Because and I've said for years, you can manage the entire business on a WIP schedule. And right now, you know, Annette and I have the benefit of having spoken and worked with literally hundreds of commercial general contractors. And it's truly shocking to me how many of them will wait 60, 90 days to see a WIP schedule at the end of an accounting period. And I can't fathom how anyone could manage a commercial construction business that way. There's no way to measure working capital allocation across project. 90 days later, the half-life on a WIP schedule is relatively short because each day that goes by, things change. There are change orders upstream, there are change orders downstream, there are unforeseen conditions, there are interruptions in receipts and payments, and the inability to see that on a WIP schedule, a live WIP schedule, is an incredibly difficult handicap for any commercial construction company. And it always surprises me when I see, you know, I see ops people that definitely appreciate and understand the value of the WIP schedule, but it's profoundly disorienting for me to imagine trying to run a business, a commercial construction company, without seeing that in real time. And one of the key capabilities of RedTeam's Flex and Go platforms is that we generate live WIP schedules, which means that on any given day, on any given moment, you can look into the application and you can see exactly where you stand from a cash position on every project. And that to me is probably the most important thing we deliver. That's the most important part of, you know, bullet number one on what are the biggest financial challenges for commercial construction.
I couldn't agree with you more, Mike. And I think that a WIP schedule using percentage of completion, it relies on estimate at complete from operations, from the construction team, from the project management team, specifically the at-risk component, the at-risk being the items you haven't bought out, the procurements that you haven't locked in prices, the unknown and unforeseen situations that you mentioned. And those are the risky things, the hurricanes, the tariffs, the things that we don't know about. So managing that on a real-time basis and accounting being able to pull that information in is the only way you'll know where you really stand. I agree with you. And yes, we can produce a WIP in Excel. Many of us do. That's after the fact. At best, you're looking at a month ago. And in this environment, that's not enough. It has to be real time, which means it has to be integrated.
And the other advantage of integration in terms of manual work and effort, there are so many things that can be mechanized, completely mechanized. Yeah, for example, in the old days, and that you remember this, in the old days, You and I built WIP schedules on spreadsheets, and we would go and ask project managers what their remaining costs would be on the project. And then they would ask us for things like, well, I need a job cost report and I need to look at a copy of the subcontract agreement. Then I need to remind myself of all the outstanding directives there are. And I need to know how much retain, there's just so many questions that have to get answered with manual inspection of reports that it literally took weeks to get the project information back, the latest revised estimated cost at complete. When you do connect the systems in real time, like we do, all that's done for our project teams. And so when Annette talks about at risk, what she's describing is a subjective evaluation by project team members as to what remains to be procured to finish the project. And I can tell you in my own experience working with my own project managers, if I ask them, what is your estimated cost to complete the project? That's something that they would have to do over the weekend or spend several days actually calculating. But when I ask project managers, what do you need to buy to finish the work? They would know off the top of their head. They would say, I need final clean, I need commissioning, I need to do X, Y, and Z. They would know off the top of their head. They would even understand and have a good sense of what it was going to cost for us to acquire those remaining buyout items. And with that information, I can look at the system and I already know their estimated cost to complete. And so we've taken that and we've instrumented that workflow into the platform such that we make it easier for our project teams to understand where they are financially and to calculate their estimated cost at complete with minimal effort on their side. And what that does is it opens the door for that real-time financial visibility that makes the difference between a construction business that can scale and be successful versus somebody that's going to struggle each time they try and grow the size of their business.
Mike, I'd like to add one additional thing. When we go back to the risk and we talk about today's risk of unpredictable costs and supply chain interruptions, weather, tariffs, and economic downturns, that buyout, if we could proactively buy out our projects and manage that at risk aggressively and lock in those prices as soon as possible in today's environment, reviewing that at risk weekly with the project manager, including the unknowns of weather and tariffs and economic downturns, we might recognize a potential cost overrun. And if we can't avoid it, in other words, if we're not locked into a contract with price escalation clauses, maybe we have time to react and find cost savings elsewhere and maintain as much profit as possible on the project.
Absolutely, totally agree. I'm going to add one more as well, which is we've got faster change order approvals. Well, getting change orders approved should be a pretty simple process. I can tell you if I go back to my days in the business, before we had solutions like RedTeam Flex and RedTeam Go, it was hit or miss whether or not the change orders prepared by my team actually complied with the contract. It's pretty common and it's a best practice that when prime contracts are executed, that project teams think forward and think about the numerical and the quantitative considerations, such as unit prices and markups. What can we agree on at the outset? What values are we going to use to adjust the contract time and price? And can we agree on those things up front and make sure that all of our change orders are fully compliant with those agreements? And that's functionality that is unique to RedTeam. I don't know of any other system that facilitates that process. But otherwise, your project teams are putting together spreadsheets and they're putting together cost estimates, and they're missing things like markups. They're utilizing the wrong unit prices, and that's just lost revenue.
Strict change order processes are key, even in the best of times. Number one, ensure change work never begins without an executed document. I think that goes without saying, even though I realize that it often happens. We want executed documents, both with your customers and your subcontractors. You cannot invoice customers for unexecuted change work, regardless of what you've done in the field, and you risk taking a loss. And you should also expect and enforce the same rules for your subcontractors. Don't ask them to complete work that has not been executed through a change order. And your prime change orders upstream and your subcontract change orders downstream should be tied together in a single scope item. Change orders can be profitable. They can also bring a lot of risk. And it starts with good software tools that have a great scope of work, that's transparent, that's tied to your subcontracts and in a good plan room. The clearer that scope of work is up front, the better it is for everybody, for all parties. We want our subs to be successful, we want us to be successful, and we want our customers to be pleased with the end result.
Selecting the right construction management software, and I know a fair number of our attendees are already on our platforms, but I do know that we've got some guests that are still in the search and selection process. And so, Annette, I'd love to hear your thoughts on how to select the right software.
Oh, I'd be glad to address that because I've worked with multiple platforms. If we're looking for integrated software, first thing, non-optional is a WIP you can filter by date or by accounting period. If you're on QuickBooks, you want to filter by date. If you're on Sage, you want to filter by accounting period. It is not optional. If the software doesn't include that, I feel like it's, you're going to be back to the spreadsheet, but you're going to be working on last month's data. The next thing is two-way real-time integration between project management and accounting. So, for example, in RedTeam, the vendor invoices are entered there. They're routed for approval, and they make it over to QuickBooks or Sage, whatever accounting software you're using. So you eliminate the manual entry. And then the payments, of course, and the cash management's handled in your ERP or your accounting system. That should go back to project management. I remember the old days, Mike, when project managers would call us and ask us for job cost reports, ask us what we paid the electrical sub. That should not happen anymore. It's right on their homepage. It's right on their buyout tab. They should be able to look at an audit of a subcontract and get all of that information. The other thing is software that handles not only accounts payable, subcontractors and suppliers, but expenses and timesheets that will allocate labor rates to the project. And you should be able to decide what those labor rates include. Do they include that overhead and administrative costs that I mentioned earlier? That you should be able to do that without having another spreadsheet and without having to do a bunch of adjusting entries to get there. I would also look for an app that facilitates vendor billing against a schedule of values. I can't tell you how much time is wasted if you don't utilize that tool of emails going back and forth, the electrician bills for an unexecuted change order, or the plumber doesn't use a schedule of values that matches yours. That's a huge time saver if you control the schedule of values with the subcontract and they bill against it.
That's actually a great point, and that one of the challenges for project teams is when costs get recorded differently than the way they were budgeted. And so by connecting the commitment schedule values to the system and the invoice disbursement authorization process, you eliminate that scattershot impact to your job cost reports. And that, so asking your project team members to quote unquote code invoices when they come in the door is a huge mistake. Consumes a lot of time, and it makes the job cost reports much more difficult to manage. And inevitably, project teams will go back to accounting and say, hey, can you relocate or move these costs because we inadvertently coded them to the wrong place? The budget belongs in a different cost code. And so if you can really short circuit that whole process in an integrated system by making sure that these workflows are connected. The other thing I'll say about software is not all accounting integrations are the same. And so it's definitely, I think when people are shopping for software, they may say, hey, I want to know if you're integrated with QuickBooks Online. And it comes off as a yes or no question, but I'll tell you, the integration itself is in and of itself a product. And so what we've built is what we describe as an event-driven integration, meaning there's no manual intervention in the process to send or receive or download. What you want is an event-driven system so that the workflows become completely seamless between the project team members. So they shouldn't have to know whether a transaction has been sent to accounting or brought back from accounting. It should all be completely invisible and all be updated in real time. So to me, that's a really important thing to consider when evaluating a solution. The other thing is during the demo process, and I know this is difficult, but show me, ask to see it. Because if you don't see it, you don't really know what you're buying. And so I think seeing it is a really important part of the evaluation process. And the last thing I would say about this is higher price doesn't mean better in what we do. And we as contractors, we've regularly see 100% or more bid spreads when bidding out work. And really the same is true when evaluating solutions for construction, accounting, and project management. So a higher price doesn't necessarily mean a better solution. Well, the best solution is one that you look at, you can see it, you can try it, and it works for your team.
Excellent. I'll add two more bullet points, if you don't mind, as far as how to, a couple of things to consider when selecting an integrated solution. I think customizable commitment forms, the ability to add those price clause escalations, or just the whole idea that if you have a specific client that requires a specific contract, the ability to customize your commitment forms, including replacement fields and a text editor, are key. And it's hard to find. But in today's environment, when risk is so high, I think it's critical. And then, of course, we also want to make sure there's online training resources, new feature notifications, and a very efficient chat support for any software application you're looking at.
Well, we only have 3 bullets on the slide, but I think we went through a lot more things to consider.
We did.
And we don't underappreciate the challenge in selecting the right solution. I would just say, chemistry is important. If you talk to somebody at RedTeam or somebody from another vendor, making sure that they really understand your business is really important. So what do you think are the key features contractors should look for when evaluating integrated construction management? Yeah, did we miss anything?
I'm all into WIP, two-way real-time integration, event-driven, as you say, no pushing. One thing I would also look for is the entity list. In QuickBooks, we call them lists. In Sage, you call them vendors and customers. The ability of a software package that if you put in a commitment to a new vendor that doesn't exist, that the software will actually create it. There is no stopping, creating it on both sides, mapping one to another. That leads to duplicate vendors. It leads to all kinds of things. That was just one thing that I deal with, pretty much on a weekly basis that I wanted to mention.
Yeah. This next question I think is right up your alley. What's the biggest challenge contractors face when adopting new software, and how can they overcome it?
I think the number one solution that I actually learned from you was that the implementation and the adoption of new technology has to come from the top down. If the president of the company, if the operations manager, if the CFO, if they are not on board 100% in promoting and educating and respecting that change is difficult, change is very difficult for everybody. But if you start with, if the top enforces it, endorses it, and sufficiently trains, it makes a world of difference. I think that is the biggest factor in adopting any major change in a company, but especially in software.
I couldn't agree more. The reality is when you move on to an integrated platform, inevitably it impacts people's workflows. And so it's really critical that the entire team understands the key business objectives being accomplished by bringing on a platform solution. Because if you don't, they may not understand the handoff points between workflows. And so if they resist those handoff points, and the handoff points may be different from what they did when everything was manual. And so everybody's job essentially gets impacted during the implementation process. So it's critical that we have good alignment from the top to the bottom, and everyone is on the same page in terms of commitment to getting the platform up and running.
Exactly. And I would say that you don't want to rush this. You want to plan it. You want to have milestones, just as you would a construction project. When you're integrating project management with your accounting software, you have to understand that things that are happening on the project management side are touching your trial balance and your financial statements. So this is a big adjustment. And this requires really good permissions on the project management side. The roles and permissions are absolutely critical as to what comes over to accounting.
Yeah, that is actually a huge issue. And so some people don't realize it until they actually get started on the platform. And then, and Annette, you and I have been shocked by this more than once. We've had teams say, well, we want accounting to do what they want to do, and we want ops to do what operations wants to do, and we don't really care if they talk or get along at all, right? Because we've struggled with the two teams, competing with each other, and so we just want to give both teams separately what they want. And I can tell you that does not work.
It does not.
And I've seen people try and do it, and it just simply does not work. We have to be able to trust each other, and it goes back to the organizational commitment and organizational alignment. The system won't work unless everybody's on board and on the same page.
Couldn't agree more. Thank you. As far as the implementation goes, Michael, though, I would recommend anyone that is going to move from a disparate system where you've got project management that doesn't talk to accounting, that you engage a consultant to manage that implementation and integration. Don't just plug it in and start using it, because like I said, it's going to hit your trial balance. And it does require a sufficient amount of planning, at a project level. Which projects are almost complete? Are we not going to implement them on the project management side? Which ones are in progress, which means we need to know what's billed to date, what our job cost to date. So there's an accounting piece to this that can be easily overlooked if you just plug it in and start using it. And then
yeah, and I've actually sent you a fair amount of business over the
yes,
years
you have. Thank you.
for clients that I've come across that want to have a mid-year transition. And they want to have a transition to move some projects onto a new platform, keeping existing projects on an old platform, and keeping all that organized is no small feat. And it requires somebody like you, Annette, that really understands the accounting, understands the operations, and is able to help people through that transition process.
And it requires patience, and sometimes it requires cleaning up the existing books. There's some work involved there. I don't actually do the conversions at this point in my career, but I certainly manage them. So there's a lot of thought that needs to go into this. So while the project management team is developing their new cost code list, implementing change order procedures, customizing their commitment documents, there's a lot going on there. At the same time, accounting in parallel should be cleaning up their AP, cleaning up their AR, as a team deciding which jobs we're going to implement in our new integrated software, so that at the end of the year, you don't have a problem with financial statements that you need to present to your tax professional, your surety, or your bank. There's a lot of balance sheet considerations here. But it can be done if you take it piece by piece and you plan it and everybody's on team and understands the advantages of doing it. And a lot of times people say, why are we doing this? Because it's a bit of work, it can be. If you're in between jobs, it's a lot less work, But the advice I give a company that's hesitant to do this is to look at the cost of not doing it. Look at the cost of not having a WIP, of knowing what your true percentage of completion is real time when you never know what's going to happen to your prices next month. It's a big picture, Mike. It's all the things that you've talked about today, the risk, the compliance. I think the cost of not integrating the two sides of the house, if you will, are much higher than the cost of the implementation and the new software.
Totally agree. I think that's great advice. Well, I think we're actually about at our time at this point. No doubt, commercial construction is a very, very challenging business. But I can tell you, and this seems universal, particularly after working with hundreds of contractors, the reason we do it is we love it. And I think as difficult as it can be, we stay in the industry because we love the business of construction. So with that, I think we can wrap our webinar today, Annette.
Thank you, Michael. Thank you for inviting me.